including Category 1 alternative investment funds. I propose to extend this benefit to Category 2 alternative investment funds also. At the moment, it's available for AIF Category 1. Now I expand this to include Category 2 AIFs also. Therefore, valuation of shares issued to these funds shall be beyond the scope of income tax scrutiny. Again, you get out of income tax scrutiny one that has been done. I also propose to relax some of the conditions for carry forward and set off losses in the case of startups. I also propose to extend the period of exemption of capital gains arising from sale of residential house for investment in startups up to 31/3/2021. And relax certain other conditions of this exemption. So, affordable housing, which is an aim of this government. For realization of the goal of housing for all and affordable housing, a tax holiday has already been provided on the profits earned by developers of affordable housing. Also, interest paid on housing loans is allowed as a deduction to the extent of 2 lakhs in respect of self-occupied property. In order to provide a further impetus, I propose to allow an additional deduction of up to 1,50,000 rupees for interest paid on loans borrowed up to 31st March 2020, next year, for purchase of affordable house valued up to 45 lakhs. Therefore, a person purchasing an affordable house will now get an enhanced interest deduction up to 3.5 lakhs of rupees. This will translate into benefit of 7 lakh of rupees to the middle class home buyers over their loan period of 15 years. Just as we said about the electric cars, now we are saying the tax deduction provision that we are coming in now with will enable home buyers of the affordable home category that in the period of 15 years when your home loan runs, the net gain would be 7 lakh of rupees. This will immediately benefit a lot of middle class. So on the NBFCs, a lot of discussion happens today about NBFCs. Non-banking financial companies play an increasingly important role in India's financial system. With enhanced levels of regulation they are subjected to by the Reserve Bank of India, there is a need to provide greater parity in their tax treatments vis-à-vis scheduled banks. Currently, interest on certain bad or doubtful debts made by scheduled banks and other financial institutions is allowed to be offered to tax in the year in which this interest is actually received. I propose to extend this facility to deposit taking as well as systematically important non-deposit taking NBFCs also. So the International Financial Services Center, the GIFT City, series of measures have already been taken in the past by this government. With a view to incentivizing the IFSC, I propose to provide several direct tax incentives to an IFSC, including 100% profit-linked deduction under Section 80LA in any 10-year block within a 15-year period, exemption from dividend distribution tax from current and accumulated income to companies and mutual funds, exemption on capital gain to Category 3 AIF, and interest payment on loan taken from non-residents. So, securities transaction tax. I propose to give relief in levy of securities transaction tax by restricting it only to the difference between the settlement and the strike price in case of exercise of option. Simplification and ease of living. India's ease of doing business ranking under the category of paying taxes showed a significant jump from 172 in 2017 to 121 in the year 2019. From 172, we have come to 121, a drastic improvement. I now propose